Hi, my name is Tanya Titman, and today we are talking about cash flow management. And in particular, we're talking about common mistakes that business owners make when it comes to cash flow. This is a really critical part of business management. It's also a reason why many businesses fail when they don't manage and understand how cash moves through their business. So we're going to take you through in this series a number of reasons and mistakes that businesses make and give you some explanation and hopefully some insight so that you don't make these same mistakes going forward. Now, our first one that we're talking about is running your business by the bank account. And this is something that many business owners are caught in the trap of because they probably don't understand the financial information and their financial statements. So they default to actually running the business by the money that's in the bank. And what I mean by that is when you've got lots of money in the bank, business is going great. Equally, when you don't have money in the bank, that things aren't so great. Now, the reason that this doesn't work for businesses is that there's many things, and particularly one of the big issues is around timing. So if you consider in your business, when you make a sale of a product or a service, you often don't get paid immediately for that sale. So there might be a time delay in collecting that money. You also, in making that sale, are collecting GST. So these two things mean that whilst we might have recorded a sale in our financial statements, we actually don't have that money in our bank account. So if we just took that in isolation, we've got no money in the bank account, but we've actually made a sale. So our profit and loss would look good, our bank account looks bad. So there's often many things in business that lead to this. And equally we have it when it comes to expenses. So when we purchase something or we have staff on the payroll, there's timing differences that actually lead us to either defer payment or to hold back payment until we actually have a BAS to pay, so a business activity statement. And these things are, in terms of payroll, PAYG withholding. So anyone that has staff, when you pay your payroll, you're paying a net amount. So you're actually withholding the tax for those staff members and you remit that on your quarterly or your monthly BAS. That holding back of the money gives you this false sense of security that you actually have some money in your bank account, but you're actually owing it in the future. So it's not yours, and many people look to put that in a separate bank account to help them manage it. The other one that we have is superannuation. And superannuation is another one that accrues over a period of time, and you've got to pay that typically at the end of the month or quarter. And it gives you this false sense of security that you actually have money in cash flow when you don't. So when you consider running a business, if you are caught in this trap of thinking that when you do have money in the bank account that things are going great, and when you don't, things are not so great, then we'd really encourage you to actually start engaging and understanding your numbers, because looking at your profit and loss statement is going to be a much better measure of whether the business is going well or not, and you need to build your strategies with that knowledge and getting the full picture around your financial position.
For more information about improving your financial literacy or Acceler8's financial education workshops, please visit www.acceler8program.com.au.